Hi friends, welcome back to EzeeHouse.com YouTube channel. Today we'll be seeing what are the reasons which are affecting the market crash right now. We've seen that the market actually has come down from around 11,800 levels to below 11,000. And if you see the markets around the world, the US markets, the European markets, and even the Asia Pacific markets, the Japanese market or the Hong Kong market, they all are actually falling together. If you want to know more about the reasons, then I'll suggest that you see the entire video. Before we start, I'd like to tell you that we've hit 700 subscribers. So thank you for subscribing to our channel. If you haven't subscribed till now, I'll request you to please subscribe to our channel, because if you do so, you stand a chance to win an Amazon Alexa speaker worth 10,000 rupees. If you like our videos, I'll request you to please hit the like button. It helps the algorithm. So let's start with why are the domestic markets falling down. So there are basically three or four reasons why the markets are falling down at this point of time. Namely, it is the US economy's pricing in that it is in a deep hole right now, and with the economic data which is coming out is not very promising. Second is there's a resurgence of COVID, or the second wave of COVID is actually hitting Europe right now. Again, a lot of countries are reconsidering putting sanctions or restrictions on people movement at this point of time. So since the world is connected and more globalized than ever, so if something goes wrong in Western markets, it is bound to impact domestic markets as well. So the first thing is that there are chances of COVID actually coming back, and we've seen numbers rising in Europe, and a lot of people are actually looking at putting restrictions, and government is like in the UK, in Netherlands, in France, in Spain. There are hotspots which are emerging, and government and people are thinking of putting fresh clubs on movement and businesses. The business community and the investors, what they don't like is uncertainty. So they had priced in what had happened before, but they had not priced in that there's going to be restrictions will be imposed again in Europe, even if the second wave comes back. And if it comes back, how big is the going to be the wave? How long the lockdowns going to last? All this data is actually creating uncertainty, and the market is actually pricing that in. At the same time, we are going to see US elections coming up in probably 3 or 4 months. So there's uncertainty as to whether the Republicans or the Democrats are going to come into power. So this uncertainty is actually not good for the markets. Second is a lot of data which is coming out is looking at a weak demand and joblessness, and there's actually call for more physical stimulus in the US. So the numbers, or the macro numbers which are coming from the US, actually show that the US business activity cooled down in September. So whatever gains have happened from factories has been offset by the services retreat, and investors are waiting for more data to come in, which is expected to show more joblessness, and they're assuming that it's going to be higher than what is expected. And even if when you look at India, we are actually reporting almost 1 lakh cases every day, and our tallies almost hit 58 lakhs. So Corona is right at its peak, and in India we are learning how to live with it. But Indian are not considering putting a lockdown. But what is happening in Europe or in America affects everyone, and the impact of these, because most of the companies do have businesses abroad. So like IT is dependent on Western markets. A lot of companies which are listed in India do have businesses and exposures in the US and Europe, and the world is more integrated. So whatever is going to happen over there it is bound to have an impact over here. And what is one thing which market doesn't know right now is, it doesn't know right now whether restrictions are going to come back, or corona crisis is going to go higher. So this uncertainty is actually causing some panic, and there is a selling which is happening in the market. So how should you react to this? So obviously it's unfortunate that corona cases are coming up, and we're going to hit close to 1 million deaths from corona, which is quite sad. But from an investor's point of view, especially from long-term investors, people who probably missed out in the previous correction should ideally look at buying into this dip, because opportunities like this do not come very often. these cycles of corrections happens in 7 or 8 years, and as an investor, you probably see them 3 or 4 times in your once you've grown up and you're investing for long term, you probably see these corrections every 8 to 10 years. So 3 or 4 corrections is what you're going to get this opportunity. So if this opportunity arises, I'll suggest that you keep on buying at dips, buy sensible companies at good valuations. So you can look at banks which are very good, like Hdfc and ICICI, and FMCG companies and pharma stocks and IT stocks. Big leaders, you can invest into these big blue chip companies whose business model is very sound, and they're going to be around even after the corona crisis gets over because of their big balance sheets, and the market will be more open. They'll be able to capture more market because they have deeper pockets. This opportunity is there for investors. I'll suggest that whenever you see a good correction, please buy into it. Do not put all your money at one go, but keep on investing as the market keeps correcting. So this is my suggestion, and we've looked at why the market is correcting. I think it's going to correct further. So I hope you make the best of this opportunity which has come along. And thanks a lot for listening to our video. If you liked our video, please hit the like button and share with your friends. And if you're not subscribed to our channel, please subscribe and hit the bell notifications so you don't miss any of our future videos. Thanks a lot for listening, and take care.